A Better Future with Precious Metals, featuring Monex and the world-renowned commodities research firm, the CPM Group, led by Jeffrey M. Christian.
Hello, my name is Sean Brasney, Sales Director for Monex Deposit Company. I'm here today with Jeffrey Christian, Managing Partner and Founder of CPM Group. CPM Group is the author of our Better Future for Precious Metals report. They also put together our quarterly and annual reports for gold, silver, platinum, and palladium. Really great to have you here today with us, Jeffrey.
It's good to be with you, Sean. I hope everything's fine on the West Coast.
So far, it is the West Coast, so we give us another day or so. Thanks again for your time. I wanted to kind of get into some of the spending by the government, stimulus package through Congress. We were talking about, back in June of 2019 when we were involved in quantitative tightening and the balance sheet from the Fed was going from about 4.5 trillion. We got down to about 4 trillion or close to it over about a year and a half. And before they did an about face and went the other direction. And now we're coming into the pandemic and stimulus packages and another new one coming through Congress. I just wondered if you can kind of take us through a brief timeline of that and give us a good solid number as to where we are in the Fed balance sheet and what we can look forward to here with this stimulus package out of Congress.
Fed balance sheet as of yesterday or last week was about 8.44 or 8.45 trillion dollars. And yes, that's more than double what it was at the beginning of 2020. So the Fed has thrown an enormous amount of cash into the economy during the pandemic and the economic lockdown. And I always want to stress, it was the economic lockdown that's caused all of these economic issues, not so much the pandemic. I mean, the pandemic has an economic consequence, but the policies that have been pursued with the economic lockdown are really what's been behind it. So we've seen a doubling of the Fed's balance sheet as it's taken on a lot of bonds and pumped a lot of money into the economy to stanch the bleeding during the recession. And that basically continues. And then you have a separate issue, which is the fiscal policies and the fiscal spending by the government, by the administration and Congress.
Yeah, those numbers seem hard to fathom in just a 2-year time frame of doubling what took us almost 10 years to build. Another thing coming out of China is the Evergrande. Looks like maybe the second largest property developer there out of China was facing a potential default. And a lot of news coming out, and it's hard to rely on the news coming out of China, I know, but it brings up the talk of more bailouts, and maybe there's some exposure to the banks through that. Any kind of intel you can give us on that?
Yeah, well, it's a little bit unclear right now. And today, as we're speaking on the, 22nd of September, there's news out of China that the government has stepped in. And, there's a massive bailout. And yes, there are going to be losses for the bondholders and all. So I think that crisis may be being contained. Now, there are several things that I would say. We've talked a lot, CPM Group, recently over the last several months about the difference between fearing an economic collapse and fearing and expecting the kinds of global financial crises, national financial crises, deep recessions, and economic and financial problems that actually we have seen repeatedly over the last several decades, if not the last several centuries. And my take on Evergrande is twofold. One is that what it is it's like those kinds of crises that we've seen before. People have compared it to Lehman. I think it's probably about as big to China as Lehman was to the United States in 2008. But if you look at it, the crisis that the Lehman collapse precipitated and the crises that previous banks and investment bank problems have precipitated were resolved. they caused economic pain. They caused investors to lose a lot of money. But ultimately, they were resolved, and the financial system did not collapse. And I think that you look at Evergrande in China, and you look at things that we expect to happen in the United States over the next 4 or 5 years, and that's the outcome that seems most reasonable to expect. I doubt that any of these things will collapse the global financial system that's been in place for 500 years, but it definitely will, they definitely interrupt economic growth and cause financial losses. And I think that Evergrande is to China one of those things. It's interesting to see how rapidly and forcefully the Chinese government appears to be handling that. And I think that's the difference between a managed economy that's run by a communist government and a non-managed economy that's run by a democracy that is plagued by, I would say, ineptitude and very deep divisions over the last 20, 25 years. So I think Evergrande may be already behind us. I'm not quite sure. But I think it's emblematic of things that we've seen in the past and things to expect in the future.
I always appreciate your opinion on that. I do hope it's passed and not any more shocks to the system on necessarily the downside.